This is Silver X mining. This is where most investors get excited. Price breaks out, momentum builds, X and YouTube turn bullish, and this is usually where they enter, the retail investors. But in most cases, this is not confirmation. It's the beginning of a trap. And what happens next is what most investors underestimate. The biggest mistake silver mine investors make is confusing strength with confirmation. In this video, I'll show you exactly why early entries feel smart, but usually cost you time, capital, or in the worst case, both. And we'll use SilverX mining as a real example. I'm Aldagio, your technical analyst for gold, silver, and copper miners. So let's start with the illusion of strength. Higher highs don't automatically mean trend shift. Momentum alone doesn't change structure. Most people only look at candles, but structure is what matters. Strength without confirmation is just volatility. And this exact pattern is repeating across multiple silver miners right now. We have strength, but at the current date of the video recording, there is no confirmation. Higher highs don't automatically mean trend shift. Momentum alone doesn't change structure. We have a failed breakout marked as red right here. We have no proper reclaim of the mid-level or of the horizontal support line. We still have no structure shift on the higher time frame. And there is still unswept liquidity at these higher time frame range lows. Most people only look at candles, but structure is what matters. Strength without confirmation is just volatility. And this exact pattern is repeating across multiple silver miners right now at the date of the recording. So we are gonna take a look on how to spot those false breakouts, explain the psychological factors and how you can fight against emotions, and how to turn the odds into your favor before you buy a mining company at a false breakout and hold it for multiple months or even a year or years before it actually starts to break out. To put all of this in context, we need to check out the higher time frame chart. We went down from a big downtrend and we formed a higher time frame range. Within this higher time frame range, which is a multi-year long range, we formed a range at the range lows, okay? This zone right here. And early entries feel intelligent, you feel ahead of the move, and you feel positioned before the crowd. But in markets, early often isn't actually early anymore, and it often means unconfirmed entries based on emotional triggers. What do I mean by that? Early often isn't actually early anymore. I mean that you need to check the overall macro market situation. For example, in this case, the silver market situation. Where are we psychologically and macro-wise? Are we actually early? Are we actually breaking out right now? Or is this just a breakout within this smaller range, inside the bigger range? Have we broken out of the range high? Have we actually broken the higher time frame market structure? High, low, lower high, lower lows? Do we form a higher low right here? Or is this just a lower high again? Within a small phase of hype for a few weeks or months before we maybe go lower again, since we haven't reclaimed this mid-level, this resistance right here, we haven't swept those lows, which don't necessarily have to be swept. But at the end, as we can see, there was no reclaim. This was just a lower high on the higher time frame within this sideways range. And what happened afterwards? We actually swept all those lows from the previous weeks and months. When the price pushes into resistance and has momentum strength, makes 20, 30, 50% within a few weeks, you have the fear of missing out because you actually think right now it starts. Right now the bull market finally starts after waiting so many years. After being in the negatives for so many years in my investment. I will buy some more right now because now it will start. You have social proof because on X and YouTube there are more people talking about this hype breakout. You have narrative bias because you are in the market for a few years already and you know the markets will break out eventually, and each little spark of momentum and strength gives you hope that it finally happens, that it's finally the time. And green candles, or in this case on my chart, white candles illusion. You see a few white candles and you think, wow, let's go on the daily chart. Wow, this is really breaking out. Let's see how the last few months went. You can see, wow, this is finally a breakout to the upside. But at the end, getting back to reality, you can see that this is actually nothing but just another lower high without a proper reclaim of this previous resistance. And the market rewards patience, not anticipation. In this case, if you would have been patient and, for example, put your money elsewhere instead of buying the false breakout right here in October or early November 2024, you could have waited 4 more months or 5 more months, putting money elsewhere or whatever, and actually buy well lower at those range lows, minus 55%, if you want to take the risk that these range lows must hold, or you wait even longer until July, August 2025. Let's go to the weekly chart and actually see, after we swept those lows, we made new all-time lows, we pushed higher, again, didn't reclaim the mid-level, but we were strong, okay? We were strong, we instantly pushed higher again instead of falling lower, instantly pushed higher again, reclaimed it for several weeks, being at this level, with silver also finally breaking out above $30, $35. This gives you a macro perspective, a macro shift from neutral to actually bullish on the commodity itself, and this gives you a chart confirmation. Otherwise, you would have held for several months, maybe even selling lower because of emotions, panic, whatever, instead of waiting for actual confirmation. And therefore, I'm going to show you how real confirmation looks like, and you can apply this on a current correction phase, or on any correction, or on any bottom forming event on any asset. So first of all, we need a structure shift. The structure shift occurs as soon as we reclaim this mid-level. Why? Because this has previously been resistance. Right here, it was resistance right here, at the false breakout, and it is resistance right here, but the big difference is that we swept those lows. The macro market is more bullish than it was in October 2024, and we are holding at those prices, at this resistance, which gives us a higher chance, a higher probability. It gives us an edge on the market. So the second thing you need to look out for, I already said it, in the best case scenarios, such as this one, you want to see a sweep of the liquidity. Sweep of all of these lows, okay? Getting all those stop loss hit in order for the big liquidity event, which happened right here. It doesn't need to take a few days or a few hours. This can take a few weeks, especially when you're looking at the higher time frame. The third thing is the reclaim, which happened right here, and which once again happened right here at the range highs, pushed higher, consolidation above, reclaimed a few wicks below inside the range again, hold it, push this week higher again, let's go on the daily chart, it looks even better, forming a bullish continuation pattern of falling wedge, clearly stating that this is a reclaim of previously big resistance, reclaim plus a shift in market structure, since this highs, this lower high, and now finally we form a higher high again. And got this reclaim. This is a shift in market structure. So if you didn't buy this strength and actual confirmation, since we reclaimed this level and the macro was more bullish as well, then you would have been buying this reclaim, which gives you an even higher probability that the price will actually break out. And therefore, the fourth important thing I look out for is defined risk. Since right here you got an uptrend on a lower time frame, where would you take or cut your losses? For example, when the price hits this level. In this case, I would have cut losses if we see a sweep below these lows. I will raise my stop loss if I'm trading it, or I will cut losses as soon after the price rises below these lows, or this one. After we reclaimed this and pushed higher, where would I be taking my losses, or in this case profit, since it's already been up? Right here at these lows, because this is still support, okay? But right here, where would I have taken my losses, okay? Where would I have cut my position? Right, let's make like this with a replay. Where is the support, okay? The next support is down here. But we haven't swept this low, okay? We haven't swept it. And we haven't reclaimed it yet. So let's fast forward this. There was no reclaim, we just pushed lower. So in this case, if you would have expected that this current uptrend on the lower time frame, okay, right here, if this holds, you would have entered right there in this gray box. This would have been the best risk reward opportunity. But what happened? It went lower, okay? And what happened afterwards? We already know it. It swept those lows. So the four framework points are structure shift, liquidity event, reclaim, defined risk, and structure shift not just for the individual stock, for the individual company, not just based on the charts, but also a structure shift for the fundamentals, a structure shift for the overall broad silver market, for the commodity itself. A lot of people would have entered right here instead of right here. Or even if they would have entered right here, it wouldn't been too good because there was no confirmation. Where the smart money entered, guys, the big investors who can hold the price up, was obviously down here at the liquidity phase. Because a lot of retail investors panic sold, while the big money who needs liquidity in order to buy a lot of stocks without pushing the price higher because there's no liquidity. So the big money buys right here at this deviation, at this liquidity zone, okay? After a lot of people got liquidated. And then they hold the market structure. They will buy again at this reclaim. Afterwards, they will buy again at this reclaim. They print the charts. Not all the time, not on every stock, but especially on small stocks. And notice the difference in risk. Confirmation doesn't mean chasing price. You don't need to buy down here like the smart money investor does. You need to buy when the odds are in your favor, when you have an edge on the market, when the risk reward is defined. It means waiting for the market to prove itself. That's the difference between emotional entries and structured ones. If you want structured entries instead of emotional ones, subscribe, because timing changes everything, and on my channel I will tell you exactly when we see confirmation on the mining stocks. I will tell you exactly where or why or when I will buy what I want to see in order to buy after a bigger correction, for example. And if you're holding a miner that finally looks strong again on a lower time frame, ask yourself, is it confirmed or just moving? The biggest mistake isn't buying bad companies, it's buying good companies at the wrong time. As we all know, silver miners are volatile, especially in the current state of the market. If you're early, volatility feels like opportunity. If you're confirmed, volatility becomes noise. You don't care about volatility anymore. You just care on structured entry zones, on your plan you made out for yourself in order to get the confirmation to buy a stock after it hits your triggers, after it confirms. Therefore, guys, don't be emotional, never panic, don't FOMO, and make your own decisions, make your own plans based on actual confirmation triggers, based on your structure, on your framework. And one more thing, obviously, you can also watch YouTubers or other influencers, watch my channel, whatever, but check out the YouTube accounts which aren't just hype, but actually the ones who give you a clear structure, who give you a clear framework, who speak quiet, who don't scream every time, who don't upload a video for every news that happens. If it's not a news channel, obviously, then it's okay. But just go and check out the videos or the channels which actually give you clarity, which help you, which help your decision making. Otherwise, it's even worse for you to watch those videos if they aren't clear for you, if they don't give you any help. And maybe you are watching this video right now and say, alright, this dude doesn't help me, I won't watch his videos again. But that's alright for me, because at the end it's your hard earned money, okay? So you need to do what you think is the best for your money. You need to watch those people online who you think do actually help you. Everybody needs to do what helps him accomplish his goals, in this case, his financial and investment goals. Thanks for watching, guys. I do hope I see you in the next one. Goodbye.